In this video, I'm going to be showing you how you can master the daily candle bias. Why this video is very important is that once you can master the daily bias, you can be able to to trade profitable for that day. So if you want to know how, or you want to learn how to master the daily bias so that you can pick your bias, you can scalp, you can be on the long trend, be on the right direction so that you will be profitable, then you need to watch this video. This video is very important if you really want to be successful in daily in the trading industry. It's very important if you really want to be profitable. Last times I posted a video on how I traded my CRT pattern. This is another hidden gem in in trading your CRT pattern, because mastering the daily bias is very important. I can't overemphasize the importance of you mastering your daily bias, because if you want to be profitable, you need to to master the daily bias. Once your daily bias is right, you are good to go. You are profitable. What you need to do is work on your work on your risk management. So the aims of this video is that I want to demystify and simplify the concept of daily bias and help you to be at the right side of the market always for more profit. Because if you are not on the right side with the market maker, honestly speaking, definitely you will not be profitable. You always end up losing your trade. So for you to be profitable and start making passive money, massive profits, then you need to to be able to identify and be able to simplify the daily bias. Now, as a recap of daily bias, now this is the daily bias. We have daily bias can be of two candles. This is the basic, as in the basic of trading. Once you understand this particular concept, honestly speaking, you are good to go. So we have a bullish candle. It's just like a recap for those of you that might not find the first video that I posted on CRT, then you can actually watch this. But if you really want to understand the daily bias, then you need to watch the last video that I posted on CRT and liquidity. I'm going to be dropping the link to the video on the description of this video so that you can watch and understand. A prerequisite to understanding the master a prerequisite for you to master the daily bias determines is you learning the to understand the CRT candle. So as a basic, let me just recap a quick recap. Now, the CRT candle or the daily candle is like this. We have a bullish daily candle and we have a bearish daily candle. Now, for a bullish daily candle, this is the scenario. It opens here, right? It opens here. It open at this area here. We have the open price. It manipulates down to the downside to give us the low of the day. Now, this low of the day, this is what is happening. Once it open here like this in Asian session, it will It will manipulate and give us the low of the day. Right now, the low of the day, this manipulation is what we call the turtle soup. We call it turtle soup. So you always find it like this. You always start the day with accumulation, give us a false move to the upside, and then a false move to the downside to give us the low of this candle. Then after this low of this candle, after this low of this candle is being formed, then you have a distribution to the upside, and then you have your consolidation back to to end the day. So this is how this is going to be the low. It's going to open, manipulate to the downside to give you the low of the candle. Then you are going to have a distribution. It is this distribution that you want to trade. This is the distribution that you want to learn how to identify. I'm going to be showing you how you can catch up the distributive part of this move in this video. Just stay to the end. Stay to the end. I will show you how you can. It is very easy. So you have the close of the candle and the high of the candle. Then for a bearish scenario, it will always open above. It will always open above. You have a manipulation to the upside. Don't forget that this manipulation will be will be during your Asia and London session. Then in London session, you have your high of the day. Most times, London session will always give the high of the day for a bearish day. And then you have your distribution. Down you target a demand area here where price could be reaching, and you are good to go. You end the day in consolidation again. You end the day in consolidation again. So for you to identify the daily bias, it's very important for you to understand the psychological of of a candlestick. It is very important. This is the basic of This is the basic of what? Of trading. So this is just the same thing that I repeated here. This is a bar chart. This is a bar chart, a bar chart representation of it. You have the open, the low, and the what? The distribution. Then you have the what? The close. So it's just the same thing, just that this is the bar chart for those who love the what? The bar chart. Right? For those who love the bar chart. So the meaning of the daily bias now. When I'm talking about daily bias, what do I mean by daily bias? Daily bias refers to the expected market direction, bullish or what? Or bearish, that we anticipate that a currency pair or an asset will move toward during a specific trading day. That is just what your trading bias is. That's your daily bias. It's an expected direction, market direction, that you expect the market, a particular pair or asset, to move within a trading day based on the data that you have with you. That is what we mean by what? The daily bias. Now, use of previous day high and previous day low in daily bias. The previous daily high and daily low can be used to draw liquidity or as a reference for what? For potential. Now, you can see this is the previous day high and this is the previous day low for this particular candle. This is a what? This is the bullish candle. This is a bullish candle. So now this is the previous day high here, sitting here, and this is the what? This is the previous day low. Now, so what we mean is that at this previous day low now, we have liquidity sitting down here. We have liquidity sitting down. What do you mean by liquidity? Liquidity is just stop loss. So stop loss now. So we will have the stop loss sitting here. So if you want to learn about liquidity, kindly check on my channel. I'll drop a link on my previous video on liquidity. So this is what? This is previous day low. This is previous day high. Now this is for this particular candle. This is the what? This is the previous day high. This is the previous day what? Previous day low. So we have liquidity sitting above this high and liquidity sitting above this low now. So what? For you to determine the what? Daily bias now, since this is a bullish candle now, you need to wait for the next what? For the next candle to form. Right, so you need to wait for the next candle to form. Right? So I'm going to be telling you how you can determine the daily bias. So for you to determine the daily bias can be continuation pattern, it can be a reversal pattern, it can be an indecisive pattern. I'm going to be showing you what you need to do on each market phase. So these are the three phases that you can have in your daily bias. So I'm going to be showing you how you know that okay, but for this particular daily bias now, I'm going to be what? It's going to be a continuation pattern. The continuation one can be a what? Can be a bullish and it can be a bearish pattern. And I'm going to be showing you how you to know that okay, this is going to be what? A reversal pattern. When you see your daily bias, you should be able to tell that are we going to be what? Is it going to be a continuation pattern or is it going to be what? An indecisive pattern. So I'm going to be showing you how you can identify the three phases of the market from your daily bias. It's very, very important for you to understand your daily bias if you really want to be what? To be profitable. It's very, very important for you. So for the first one now, we have the what? We have the continuation pattern, which is a bullish pattern. Now, this is the rule now. This is the rule. Pay attention to it very well. If price closes above the what? Look at this. If price closes above the previous day high, then you have all possibility that what? That for that particular day you want, for the next day now, is going to be what? It's going to be a bullish candle. So if price what closes above the previous day high, price action will likely attempt to what? To surpass the new day candle. This is what I mean. If you have a bullish candle like this, you have a candle like this, the first candle like this, and then you have another candle like this, that what? Another candle like this, right? Now this can look at this current candle now, it has closed above the what? What we mean above, it closed above the wick of this first candle, right? This is the first candle, this is the second candle. So for the third candle now, for the third day that you want to trade, or the third candle now, you have a possibility that what? This is what you are going to be bullish for the next day. Right, you are going to be what? To be bullish for this. So this is what I mean, that now the first candle closes above, the second candle closes above the first candle. Obviously, the third candle should also what? Closes above the what? The second day candle. So this is how you know that once you see this pattern on your chart, there's all possibility that what? That the next day, which is the day you want to be trading, is going to be what? It's going to be a bullish day. and I'm going to show you how you can what leverage on that. So this is what I mean. Right, look at this is what I mean now. So look at this first day now. Look at this is the what? This is the previous day high. This is the previous day low. Right. For this particular candle now, this candle now, this is the open of this candle. Right. And this is what? This is the daily close. You have the what? You have new high candle. This is your new high. And this is your what? This is your new low. So there's all possibility that what the third day now, which is the day you want to be trading now, you have something like this. Price will always be what? Will be bullish, because you have liquidity sitting above this what? This whole day high, this previous day high. And the best of all liquidity they can take, which is the surest of, is what? Is your previous day high, because price that closes above the previous day low. So automatically this high is no longer strong. It is no longer strong, it is a weak high. So you have tons of liquidity sitting above this what? This high. So your focus should be, your direction for the next day is going to be what? It's going to be a bullish day. So you just need to what? To go to your lower time frame. This is your daily candle. You just need to go to your lower time frame, like 15-minute time frame, and leverage on the price action that you have. Just look for a demand zone there where you can buy, and then you'll be able to catch up what the move. So this is what I just explained, right? So since price closes above this, or this is the first day, this is the second day, price closes above what? Above the what? The eye. Look at it. It is the body, not the wick. Pay attention to this. It has to be the body of the candle, not the wick. If it is the wick, that is another thing entirely. That's another rule entirely. So you are focusing on the what? The body of the candle. If you have something like this, you have the first day candle like this, right? You have the second day like this, right? You have the second day like this, right? This is another thing entirely. This is another thing entirely. It is different from this. Pay attention to the what? To the body of the candle, not the wick. That's the pro tip I'm going to be giving you. Pay attention to the what? To the body of the candle and not the wick. Right. So the third day now that you want to trade now, there's all possibility that what the price will close. Since this second day candle now has closed above the body, close above the wick of the first candle, then the third day there's all possibility is going to be closing above the what? The previous day high. Right. So pay attention to the what? To the body and not the wick. It is very, very important. Pay attention to the what? To the body and not the wick. So I'm going to be showing you how it is on the chart. I'm going to be showing the what? A good picture of it on the chart. Now look at this day now. Look at this particular day. This is our first candle. It closes above the what? This current candle, right? It closes above it. So with this now, I know that okay, the second day should be what? Should be bullish. And look at what happened. The second day too closes above the what? The previous day high with a body close, not a weak close. So this is the third day you are trading here now. You can see it closes above it. So with up, the following day should also what? Close above the what? The previous day high. So once you're able to see like this, so if I'm trading this day now, since I have this candle now that closes above this, right? I know that okay, for the next day, which is this day, this particular day that I'm trading here now, that the price should be what? Should be bullish. The market should be in a bullish trend. So I'll just go down to my lower time frame. You can see this is volatility 25 on my daily time frame, right? So I'll just go down to my daily time frame, my lower time frame. It can be my 1 hour time frame, it can be my 15-minute time frame, it can be my 5 minute time frame, it can even be my 1 minute time frame, as you always see from my what? From my screenshot. I trade from 1 minute time frame. These are what I does. These are what I does when you see me trading with what? With 1 minute time frame. I've already done my what? My higher time frame analysis. I've determined my daily bias at that particular time. Now, another thing that you should understand, that the daily bias now, you could determine the bias for a session. You could determine a bias for an hour. You could determine a bias for 4 hours candle. This thing boils down to you knowing some certain rules, you knowing some certain rule. That is how you can be what? Be profitable in the market. Once you are on the right side of the market, you are on the right direction of the market, obviously you will be profitable. And so this is the what? This is the first rule of it. This is the first rule. So this is the what? This is the first rule. So this is the what? This is the first rule, which is a continuation pattern, which is a bullish continuation pattern. right, which is a bullish continuation pattern. So the second rule now for a bearish continuation pattern now is this. Now, if price closes below, look at it. If price closes below the what? The previous day low. It closes below the what? The previous day low. Then there's all possibility that what? If price closes below the what? The previous day low, price action will likely attempt to surpass the new day low, the new daily low. This is what I mean. Let me show you what I mean on the what? On the chart. This is the second rule. Now, this is what I mean by this now. Now, this is the first day. You can see that this is our what? This is our previous day high, and this is our what? This is our previous day low. Right, this is our previous day low. So this new day candle now, this is the open of the candle, this is the high of it, and this is the low of it. Now, since look at this daily candle now, look at the previous day low here. You can see that this current day now closes below it. Below it, this is the close of this candle, this is the open, this is the bearish continuation what? Reversal pattern. So once you see this, that you know that the next day now should be what? Should be bullish based on this what? Psychology that you've seen, based on this price action that you've seen in the market. So once you're able to that, so this is what you should expect the what? The third day that you are trading. You expect the what? This current candle now, which is the third day that you are trading. Remember, this is the second day. So the second day that closes above this, that gave us the confirmation that what? The next day should also what? Should be a bearish candle, should close. So you just need for price to what? To open. Go down to your lower time frame and look for a supply area where you can what? Where you can set this market from and target the what? The previous day low. Target the previous day low. 85% of this time when you follow this thing, you take profit, you will always be hitting your take profit and not your SL once you apply what? Risk management. So let me show you on the chart. Let me show you on the chart. So I already marked it out right on this. You can see this is what? This is volatility 25. See the same what? Volatility 25 on the daily time frame. Now look at this candle here. Look at this candle. This is the first day. This is day one. This is day two, right? This is day one, this is day two. You can see that what? This particular day here now, this candle closes above it, right? This candle closes below it, sorry. It closes below it. So the next day you should expect a what? A bullish move, right? You should expect a bullish move, right? So now look at this. This is the close of this candle. Now look at this. It took out this what? This low, but did not close below it. Now that is those are the I particularly showed you this kind of example now that sometimes you have it like this that it will close it, but what I'm telling you is that if you target the what? The previous day low, see, if you want to be profitable, you need to work in line with liquidity. There's something we say that if you cannot catch them, then beat them, right? Is that you are in the liquidity? Is that you what? Is that you are the liquidity or you provide the liquidity in the market? Grab the liquidity or you provide the liquidity in the market. That is what we tell you. So look at that. This particular dinner, you can see that once you need to apply risk management and know where liquidity is, the minute they came down here, they tapped this low, but they did not close below it. If you can take your entry from the high, from the open here, target the what? The previous day low, you are good to go. Now look at the third example that we have here, the second example that we have here now. Look at this candle now. It closes below it. This is our first day, this is our second day, and this is our third day. What happened the next day? You can see you have it what close like that. This is another example here. It closes below it day one. This is day one, day two. It closes below it. You should expect a what? A reversal. Are you gonna have? So you always find this pattern in the market day in, day out. You always find it in the market. Your job is just what? To go on your chart, backtest this thing very well and see what I'm telling you. And see what I'm telling you. So the second rule that we have now is what? Reversal pattern now. This is the reversal bullish pattern. Now, reversal bullish pattern in the sense that if price fails to closes below the previous day low, look at it. Five fails to close below the previous day low, right? It fails, then it is likely you have a reversal at that particular day, at that new day, right? Price action will likely reverse and try to take out the new day high. Let's go on the channel and show you. Let me see what I'm showing. Let me show you what I'm showing. Let me show you what I'm saying. Now this is what we have. This is what we have in the market. Now look at it here. This is meanwhile if you are here to subscribe to my YouTube channel, please do well to hit on the subscribe button, and if you find value in this I'm sharing, please hit on the like button. That's the way you can show your appreciation. Remember that what I'm sharing here now, the gem that I'm sharing in this video, it is what people charge thousands of dollars, hundreds of dollars for just to show you. I've decided to show you without charging you for anything. Then you should appreciate me by clicking on that like button. And if you are here to subscribe to my channel, please do well to hit on that subscribe button and turn on the main notification so that you stay updated each time I'm dropping a new content. So this is what I'm showing, the reversal pattern one, which is the first one. Now you have your previous day high here, you have your previous day low here. Now this particular day now, prices open here. What happened? It's pushes price down to this area and then you fail. This is your close. Now look at this particular candle. This is what I'm showing you now. If you look at this particular day now, this new day now, you can see that the close of the candle is within the range of this one, this first candle. This once you have something like this, a pattern like this is telling you that the next day you should expect a what? A bullish candle, a bullish day. You should expect price to be like this. This is what it's telling you. Because since price has failed to take out the what? The previous day low, it takes out the previous day low but did not close below it. It's telling you that what? There is a change in the momentum in the market. The demand that we have in the market surpasses the what? The supply that we have in the market. So you should have a what? A reversal day. The next day should be a what? Should be a reversal day. So this is what you should expect in the market the following day that you want to trade. So expect something like this the following day. That's what I just showed you here now. So expect it like this and just go to your chart and backtest. You see what I'm showing you. So this is example of it on our chart. You can still see I'm still using the same volatility 25 on the daily time frame, the same chart. This is to tell you that this thing repeats itself often and often. You just need to train your eyes, know this rule, and set to look out for them on every blessed day you want to trade. Now, this is example of what I'm saying here now. This is the example of what I'm saying. Now, look at this day here. Look at this day that we have here. Look at this particular day. Now, look at this. This is our day one. This is our day two. Look at price closes below, right? Below the what? The low. This is the close of this candle. It closes below. So we have this what? This reversal pattern here. Now the third day, now look at it here. This particular day now, this is our day one, this is our day two. Price fail to what? To closes are below the what? The low of this day. Rather, it closes back inside the range of this one, this first candle. So this is our high, this is our low. So the next day, you should expect something like a what? Like a bullish day. And look at what we have. The following day, we could not until this particular day a simple profit for you. Just understand this strategy, this concept, and you are profitable. Can give you a 5% guarantee that you will be profitable. So this is the second type of the reversal pattern. This is what? This is the bearish reversal pattern. Now, if price fails to close above the previous day high, then price will likely reverse and try to take out the what? The new day low. Remember it, pay at ten tion to it. It fails to close above. So that's telling you that what the new day should be. This is what we are saying. You have this what? This day here now. This is the close of this candle here. You can see that it closes back inside the range of this first candle, right? So this is showing you that what there's reversal forming already. So this next day now, you should expect something like this, target something like this. This is what you should put in your brain, your mentality, that okay, this is what I'm expecting. How do I realize this? So for you to realize it, that is where your what? Your lower time frame will come in. So once you have a pattern like this already on your market, you should know that what you are expecting a reversal, a change in what? A change in trend, and this is what you should expect the third day. Right, this is the third you should expect in the third day. So let me show you on the chart again. So this is the time. Still look at the volatility 25 on our daily time frame. Same chart, same thing. I'll show you 4 different patterns now in the same market. This thing happens often and often. You just need to train your eyes, understand the rules, and look for this pattern. Once you can able to spot this pattern, honestly speaking, you are profitable. Now, this is the example. You are already marking out, so I will not waste our time. Look at this day, and now this day high. We have what? This day, this is the high, this is the low, right? This is the what? This is the high, and this is the low. Price closes below it, right? It closes below it, right? Closes below. Okay, look at it here now. This is the high, this is the what? This is the low. Price close. Look at this day here. This is our day one. This is our what? Day two. You can see that price failed to close below the what? The high of this candle. The next day, what do you have? You can see we have this what? This momentum here. You can see we have what? A bearish day. Right? We have a what? A bearish day here. This is another example here. Now look at it here. Price failed to what? To close above the what? The previous day high. And you have a what? Look at what you have here. Same thing, same chart. Often and often you always find it in the market. This is another example here. Price fails to close above the what? The high of the previous candle. What do you have? The next day you have a what? You have your bullish day. So train your eyes to see this thing. It repeats itself every time. I can tell you it repeats itself every hour, it repeats itself every seconds. You just need to train your eyes and understand this rule. That is how you can get this thing here. So the third candle now the third example that we're looking at now was the what? The indecisive pattern. Now the indecisive pattern in the sense that if price fails to surpass the what? The previous day high or low, it's wise to continue the following bias. This is what I'm going to show you. Understand it now. Alright, so we have two type of it. We have the bearish and we have the bullish. So for this particular one now, indecisive A, if price fails to surpass the previous day high or low, the previous day high or low, target the previous day high if previous bias was bullish. This is what I'm saying. Now look at this. Because Modupetemi, we've checked this thing. No, look at this day now. Look at this particular day. This is the first day. This particular candle closes above the what? The high of this candle. So this is telling you that what? You are bullish. And what do you have here? The next day you have a what? A bullish candle. Now this particular day now you have the high here, you have the what? The low here. This particular candle now did not take out the high, did not take out the low. Now what you should expect that the next expect what you should expect that this kind of market we can call it a ranging market. Some will tell you ranging market, fine, ranging market, but what do you do? How do you know what to do? So the best you can do, the wise of what you can do is what you should target the what? This previous day, because the last bias that we have was a what? Was a bullish bias. So you should target the what? The previous day high. That this next day now you should be able to take out the what? The previous day high. So that is how you what? You determine your bias in a days like this when you have what? You don't have a clear pattern when market did not take out the previous day high or the previous day low. And you can see this is what you should expect. Like I said, you can see that what? The next day they took out the what? The high of the what? That first day, the former day that were coming before the day that will have the what? The indecisive candle. If you find value in this thing, please hit on the like button and give me a thumbs up. And remember to what? To share with other traders to let them benefit too. You just need to what? To be profitable. Remember that I'm not charging anything for this, I'm giving it for free, and this is what people will charge thousands of dollars for. Please hit on that like button and turn on the bell notification, subscribe and share with other colleagues. Let them to benefit from this. So this is the example of it in the chart. Now look at this day. This is our first day. Price closes above the what? The previous day here. This already cite the bias for that we are bullish. Now look at this. This is our high. This is our low. And look at this particular candle here now. It did not close above it. It did not close below it. This is an indecisive candle. And the next one do you target? Target the high of this candle. Target the high of this what? This previous day. This is your bias. You can see what do you have there? you have bullish, the third day you have this. So that is what the pattern repeat itself times every time, day in day out. You just need to what? Train your eyes and see it. So this last one is what? The indecisive D. If price fails to surpass the what? The previous day high or low, target the previous day low if the previous bias is what? Look at this. If the previous bias was bearish, then you should expect that what? The bearish pattern will continue. This is what we are saying in a nutshell. This is the second type of it. This is the second type of it. Yeah, so this is the second type of it. So let me show you. This is what I mean. So look at this day now. We already had just look at this particular day now. The candle has closed. This candle now closes below the low of this candle. This is telling us that what? We are bearish. But the next day, what do we have? We have a consolidation day, an indecisive day. It did not take out the low, it did not take out the what? The high. So for the next day that you want to trade now, you should expect the what? This particular trend here, direction here, this bearish pattern, bearish trend should continue. So you should target the what? The low of this day. Target the low of the what? The previous trend. So this is what, as a matter of fact, if you understand your daily candle, you can tell what your 1 hour candle is saying or your 15-minute candle is saying. So this is example of it on the what? On the chart. So I've decided to change the example that we. So this is volatility 50. So look at what we mean here. So this is what we mean here. Look at this particular day now. This candle closes below the what? The low of this candle. Now this day now, indecisive day. What do you have the next day? You can see that the what? They take out the what? The low of the false buyers that we are working with. Right? So they took out the low of the false buyer that we are working with. Right. So this is the bearish, this is the bullish pattern of bullish side of it. Look at it here. High, low, they didn't take out it. The next, what did they do? They take out. So this pattern repeat itself often and often. You just need to take your what? You just need to train your eyes and see this pattern and see them. So meanwhile, if you find value in this video, please do well to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. And if there's anything you want me to talk about, please drop it in the comment section. Or what you want my next video to be, drop it in the comment section. I'm definitely going to address it. Now, if you want my next video to be on entry patterns that you can use or how you can scalp on 1 minute time frame or 2 minute time, just like always see me doing, drop it in the comment section that what a scalping strategy. I'm going to be doing the videos on it. Until the next time, I'll be crossing your path. Stay profitable in the trade.